Number one is the continued strengthening of the capital structure. Most REITs have sort of finished this process. Their leverage is down, their long-term debt exposure has been mitigated, much more fortress-like capital structures, which is important after what we went through here 4 years ago. And then I think the other story has been fundamental recovery. If you look across all the subsectors, the sectors that are still rolling down in terms of rents and earnings, in fundamentals or office and industrial, those are rolling down less, so they're strengthening. Some of the high growth sectors like storage and apartments have been flatlining to some extent, but still growing. So I think overall the fundamental story for the year has been stabilization of operations and fortress-like balance sheets that position the stocks, position the companies very well for the year ahead in terms of opportunity sets.
In 2012, we think that the biggest story has been the continuation of the strong fundamentals within commercial real estate. Even though the economy has been on a modest growth pace, REITs have been able to generate, by our estimates, about 8 to 10% underlying cash flow growth. And that's a very attractive level of cash flow growth. And so I think investors were pleasantly surprised that the REIT universe broadly was able to deliver such robust cash flow growth in 2012.
The companies have continued to grow, maybe not at quite the pace we would like to see, but they've been able to grow, outperform the broad market. If you look at it on a price-only basis, the REIT index has outperformed the S&P 500 by 200 basis points. If you look at it on a total return basis, it's more like 350 basis points outperformance. So, I think that shows us that there's demand among investors for companies that own hard assets, that are run relatively conservatively, that have strong balance sheets, that have the ability to withstand downturns, and we're all waiting for some economic growth. We're waiting for some job growth, and I think everyone realizes that these companies are going to be very well positioned to benefit when that eventual growth starts to pick up again.
Over the course of the year, the macro backdrop's actually deteriorated, but yet REIT earnings have been revised generally up, and so it goes to the durability of the cash flow streams that these companies produce, and I think that that's happened again in 2012 just as it did in 2011, and it's pretty remarkable.